Good morning. This is Larry McMillan with a stock market update on Monday, August 7th. I'm out here in Las Vegas for the Money Show Summer Summit, I guess they call it. Anyway, the S&P has fallen back a little bit from its highs. And on Friday, in fact, it had a pretty negative reversal day. So those are some negative things that took place recently, and that has left resistance up at 4,600. However, today the market's rallying again, so the chart of S&P is still bullish. There's support at 44.40, then 43.30, which is the major support the way we're looking at it, and then 4,200 below that. If we were to fall below 43.30, I would change my opinion away from a core bullish stance, but we are keeping that core bullish stance for right now. Having said that, a number of short-term, near-term sell signals have arisen from our various indicators. One is the McMillan volatility band sell signal. Also, both equity-only put-call ratios have rolled over to sell signals, and both breadth oscillators have rolled over to sell signals. Now in our daily services, we're trading these signals, but they have very tight stops on them. So if the overall bull market just resumes immediately, the risk on these selling positions, these short positions, is small. Meanwhile, new highs on the New York Stock Exchange continue to plow ahead, so that indicator remains positive. And VIX is sort of up in the air. VIX has now returned to spiking mode, which in theory could be negative for the market, but it usually requires VIX to take off and start to move quickly higher. It moved a little bit higher last week. That's what put it in spiking mode, but it hasn't really done much today. So the typical seasonal behavior is for VIX to bottom in July and rise basically through October, and the stock market typically goes the other way during that time. So we'll see if that pattern is setting up again this year or not. But for right now, VIX has entered spiking mode, and we're watching that carefully. The construct of volatility derivatives, which is the term structure of the VIX futures and the CBOE volatility indices, that all remains positive still, positive for stocks, that is. The term structure slopes upward, and that means everything is fine. If it were to invert, that would be negative, but there's no sign of that happening right now. So right now the indicators are mixed. The S&P chart is still bullish, and since that's the primary measure of the market, we have to admire that in the face of a lot of other things going on, and we're retaining a core bullish position. We are, however, trading these other short-term negatives against it, and with short stops on these tight stops on these short positions, any losses would be relatively small if the market continues upwards. Meanwhile, if it returns to the seasonal pattern, we'll be glad that we have some of these short positions on. So I invite you to visit our website and take a look at our daily letters, where we keep track of these things on a much more frequent basis, because things seem to be happening pretty quickly again right now, and that could be the case here for the next couple of months. Meanwhile, have a great week trading.